All opinions expressed by the guests of the Manage the Fund podcast are solely their opinions and do not reflect the opinions of Henry & Horwath Wealth Management or Independent Financial Group, and may have previously been disseminated by the host or guest on another media source. Independent Financial Group does not allow the purchase of any cryptocurrency-based securities. Do not treat any opinion expressed on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of an opinion. Such opinions are based upon information of the guests on the Manage the Fund podcast that we consider reliable. Neither Henry & Horn Wealth Management nor IFG warrant its completeness or accuracy, and it should not be relied upon as such. Henry & Horn Wealth Management and IFG are not under any obligation to update or correct any of the information available on the podcast. The guests of the Manage the Fund podcast are professional traders who may actively be involved in securities discussed herein or on behalf of themselves, their companies, or their clients. The host and guest of the Manage the Fund podcast do not guarantee any specific outcome or profit. You should be aware of the real risk of loss in following any strategy or investment discussed in this podcast. Investors may lose money following advice provided by this podcast. Investment strategies mentioned on this podcast may not be suitable for you. You must make an independent decision regarding investments or strategies mentioned on this podcast. And before acting on information on this podcast, you should consider whether it's suitable for your particular circumstances and strongly consider seeking advice from your own financial or investment advisor. Hi, this is Michael Carlin, president of Henry & Horn Wealth Management here in Scottsdale, Arizona. Today, could not be happier, more excited, energized, enthusiastic to be joined by Will Quigley. For those of you who know anything about cryptocurrency, for those of you that watch YouTube videos to learn more about cryptocurrency, you may have come across Will and some of his great YouTube content out there. It's truly impressive. William, thank you so much for joining us.
You're welcome.
Well, let me tell you a little bit about Will. Let me brag for you. I've got my notes. This we could take a half an hour just going through who you are. Will Quigley, CEO of Opskins. It's the world's largest marketplace for video game virtual items in wax, worldwide asset exchange. My son knows exactly what that is. My son's 15 and he loves, he would probably faint if he knew the podcast was happening right now. Will's the managing director of Cashel Enterprises, a cryptocurrency focused investment vehicle. Cashel, if you don't know about it, it incubated and invested more than 40 Bitcoin and blockchain and cryptocurrency related investments. Will, you may have forgotten, but you co-developed the first crypto derivative used to trade pre-release Ethereum. Amazing. We're only halfway through. There's more. He co-founded many transformative cryptocurrencies, including Tether, GoCoin, pioneering crypto payments processor. Again, before that, you were with Clearstone Venture Partners, early stage venture capital firm, and you focused on internet investments. And prior to that, Walt Disney. Will, like I said, we could do just a half an hour on how great you are. Thanks again for joining. And we really appreciate your thoughts and expertise as we get into Bitcoin. So with that, Bitcoin is kind of going to be the title, but this is really about cryptocurrency.
Sure. I
think it would be helpful to unpack a little bit about Bitcoin. I mean, some know that it started in 2009. But many don't really, since it's come to the forefront of so many different conversations, people don't really understand the big picture behind what cryptocurrency and Bitcoin means. Could you kind of provide what you and how you translate that into common thought?
Yeah, and there's as you can imagine, there's the longer answer, there's a shorter answer. So the shorter answer is, it is a way to pay people. It's a little token, a digital token. You can send to other people online. You can essentially email them a little token, and that token is accepted by many people across the world as payment, like U.S. dollars. And so that's the very basic thought of it. It's it has these special magical properties. I think they're magical in that nobody owns the technology that allows Bitcoins to be sent back and forth. There is no company personnel to run the software. It's all volunteers. And strangely enough, even though you can log into a certain place on the internet and see all the Bitcoin transactions, which Bitcoin accounts are sending Bitcoin back and forth, it's the most secure way we know to send the equivalent of money on the internet. It's where a lot of professors and other people who are experts in cryptography have really marveled at how secure it is to send these payments back and forth.
Is there a way for us to gauge the safety and security of the Bitcoin versus buying something using your credit card on Amazon? Because, it took a little bit of time for people to become comfortable using keeping credit cards online and storing them and buying things quickly. Now it seems second hat, but we're having these waves and waves of hacking schemes and scandals that are making people potentially feel a little bit less safe and secure with their online transactions. Is there a way to kind of provide a little bit of an analogy between which one's more safe and more secure? Is there a way to look at that broadly?
Yeah, I would say even if you are what someone might call an expert in cryptocurrencies and blockchain, that's a very hard question to answer because so many things come into play. Mm-hmm. To give you an example, we could say, well, if you have a password for your bank account, then it's safe, right? Unless, of course, you never change the password and you give it out for other types of applications and you get compromised. In that case, it's not safe. Well, the same way, Bitcoin is very safe, but if we define safety as not losing your Bitcoin or your Bitcoin investment, there's some downsides to Bitcoin. The biggest one is this. If you use a credit card to buy something online and then somehow they get your credentials and a bad guy buys something that you never got, the U.S. laws protect you, and generally the credit card banks, they eat those losses.
They backstop you, yep.
Yeah, whereas with Bitcoin, it is there is no one backing it. There's no company you can call if you lose your Bitcoin, and that's very scary. Right. So it's a little paradoxical in that it's a very secure way to send things through the internet. Having said that, if you were to have your account compromised, you bear 100% of the loss. About that.
Great.
And we should probably, make the caveat here that, there's a lot of information that you need to understand before you just willy-nilly buy these things. Like any investment, right? You need to have some education. But the thing that's so great about Bitcoin is there is so much free and very useful information online. So I'd encourage your listeners, if any of them haven't yet dabbled in cryptocurrencies, there's, between YouTube and Quora and just general Google searches, you can find terrific information to get knowledgeable.
And do the YouTube. Do start with Will Quigley's. These are the best. Trust me, I've seen them. So there's three ways that I see to acquire Bitcoins. I see buying on exchange and transfers and mining. Can you help break that down in terms of acquiring Bitcoins, those three different ways?
Right. So most consumer products, the companies that make them, they spend a lot of time to make sure if you want their product, you can easily acquire it. Right? They put it in all the store shelves or they ship it to you. They want to make sure you can get it. Dial this 1-800 number. We'll talk to you. Now, remember, it might have been overlooked a bit when I was talking about Bitcoin earlier, but no one owns the Bitcoin company, so to speak. It's software that runs in the internet. No one owns it. And so there's no one to call. which means there's no one to try to make it easy to get the Bitcoin. In a weird way, it almost feels like it's intentionally difficult to get it. So a few companies have popped up to enable somebody to use a credit card to buy Bitcoin. And for the purpose of this podcast, when we talk about Bitcoin, we really mean all the other digital currencies, because there's more than just Bitcoin.
Yeah, well, we got to unpack that too. Yeah.
Yeah. And so you could go to a site, put in your credit card, and buy some Bitcoin. It's easy to do because everybody presumably knows how to put their credit card in online and buy something. That is good if you're going to buy $1,000 or less of Bitcoin. If you're going to buy more than that, that's a terrible way to do it.
Okay, well, I wonder why.
Yeah. It's is your audience familiar with being KYC'd and AML stuff, and they familiar with those terms?
I would say, you mean anti-money laundering and things like that? Is that what you?
Know your customer, KYC?
Sure.
Yeah. So they put you through a whole bunch of hoops, these sites, and they limit how much you can buy to a few $100s.
Okay. So that makes sense.
It's not decent. If you want to buy, let's say, $10,000 or more of cryptocurrencies, the best way is to acquire it via a trusted cryptocurrency exchange.
And let me just say this, by the way, as you're doing that, I would say that there are clients that are going to be downloading this podcast where their Bitcoin investment would be, 50, 100, 250,000. Those are the kinds of numbers that I think you could expect. So as we're thinking about how to process it, that would be the kind of person that we'd have in mind.
Okay. So, if you're going to invest, let's say 50 grand to 250 grand, the best place to go would be to one of the trusted exchanges. And again, Google it. You can find a list of those and, sign up. It's a lot like if you've ever signed up for an E-Trade account or any other brokerage account. They want all kinds of information, but you sign up and then you send them a bank wire. And once they get the bank wire and it's been credited to your account, you can go onto your online account and you can buy Bitcoin at the current price. Right. You can set in limit orders, and then a Bitcoin is the gateway coin. And what I mean by that is once you have Bitcoin, you can use your Bitcoin to buy other cryptocurrencies that are not Bitcoin.
Oh, okay.
So, but everybody wants to start with Bitcoin. And now someone might say an even easier way to do it is if you know somebody who has a lot of Bitcoin, they may want to sell it to you. So you could wire it to them. And that I would say is pretty common as well.
What about mining? What is this? There's mining, and then there's the energy in mining, and there's all the stuff that you read and hear about. So
I would just say stay away from it.
Okay.
And if you're listening to this podcast, so maybe you're just sort of getting your feet wet in crypto, just I could go into why I don't think mining makes sense, but if you can research it. But my advice is don't have any plans to acquire Bitcoin by buying Bitcoin mining computer equipment. Just a bad idea.
Too expensive. Bad idea. Too many. We could do a half an hour on that.
Yeah, just I would not do it. If your guys are all like ROI focused sorts of smart individual investors on this podcast, then I just say the ROI sucks. Yeah. So we can talk more about how people go and consider the right amount of exposure to the cryptocurrency asset class they should have from their own financial perspective. Right. But I do think anybody who is doesn't need all the money that they have like over the next 3 years. I wouldn't invest in crypto unless I had at least a 3-year time horizon. But if you're not going to need all of this in the next 3 years, it's irresponsible, financially irresponsible, not to have some exposure to cryptocurrencies. Just you have some exposure to real estate, you have some exposure to stocks, you might have some exposure to a commodities related,
sure, non-correlating assets, things like that.
All the things that are not necessarily correlated. Let's hope anyway.
Right.
And this is one. What your people, though, what I would tell the listeners here is one thing, and I'm a lifelong venture capitalist, and the worst aspect of early stage venture capital is the concept of illiquidity, not being able to actually sell or liquidate your holdings easily. Most early stage venture capitalists, they have private company stock. You can't trade it easily. The thing that I get most excited about when it comes to cryptocurrencies is the fact that there's not 1, 2, 10, 100, 1,000. There are 6,000 cryptocurrency exchanges. If you want to get out of your Bitcoin or your Ethereum coin or your Wax coin, you can do it in seconds.
Right.
It's awesome. That's on even real estate, which maybe in California, you can flip it, but it's going to take you a couple of months minimum.
Sure. So, wow. All right. Well, listen. As you're talking, you realize that you're bringing to light hundreds of points and questions, and
I know.
But let's say somebody goes out, they go and they buy it, and they want to get it because they want to get away from the traditional fiat currencies. They're worried about what central banks are doing with money supply. They're again worried about purchasing power. So,
okay.
Where are they going to hold it? How are they going to do that?
All right. So let me make 2 points about that, because that's first, you raised the first problem, which is this can be a pain to actually get.
Right.
But we've tackled that. So then you bought it. What the heck do you do with it?
Right.
That is a really difficult question, because if you are an investor in commodities, everybody knows you have silver, pork bellies, gold. No one who's thinking about investment wants to physically have custody of that stuff, right? You're not set up to hold it. Well, most people are not set up to hold cryptocurrencies. And because there is no Bitcoin company or cryptocurrency company that you can call in case you've had a problem with it. Let's put it this way. If you lose your password to your account, it's lost forever. Lost forever. And there are many, many, many sad souls who have, 10 million, 20 million, 50 million, $100 million worth of Bitcoin that they will never get because they lost their password. Now, for anybody who is as old as me, who has ever had an online account, maybe you're really, really good about this, but I bet most of us have lost our password at some point.
For sure.
And the best thing is when you can click a button that says, forgot your password,
right? And
you go through a few hoops, and sometimes somebody calls you, whatever, right? So if you lose your password, you lose everything. Therefore, holding this stuff is really risky, incredibly risky. And I, therefore, tell people you're going to do one of two things when it comes to buying cryptocurrencies. If you're going to buy 50 grand, 100, 250 grand, you are either going to set aside, call it 20 hours. I think you can do it 20 hours over whatever period of time you want. And you're going to become proficient in buying Bitcoin, putting it into a Bitcoin storage facility of some type. And I can talk, I don't want to get too complicated with terms, but there's different ways to safeguard your Bitcoin. I think in about 20 hours, you could figure out how to do it and feel safe in what you did. Or if you don't want to do that, and I always emphasize this, do not touch cryptocurrency unless you are going to spend a couple of dozen hours learning about it. If you're not willing to do that, don't touch it.
Right.
So that's it. Or if you don't want to do that, you can still get exposure to it. And my preferred way for people to get exposure to Bitcoin is my preferred way for people to get exposure to venture capital. You don't practice that unless you know what you're doing.
Sure.
You hire a professional. So you invest in a venture capital firm who know all about how to do this. They do it for a living. Or in the case of crypto, you invest in a cryptocurrency investment fund. That's my preferred method for people who are just getting interested in the sector. I think it is so much better.
It's about diversity of cryptocurrencies. It's about professional selection. It's about yes, all of
those things. It's about safeguarding it, right? It's about we haven't talked about this, but some banks will not allow their customers to use the bank's wire system to acquire cryptocurrency. So your bank, you can't actually buy it. Your bank refuses to send money to the Bitcoin exchange. So that, I would say that's the majority of banks in the U.S.
Sure.
By the way.
For now, at the moment.
You definitely don't want to do that. So the best advice I give people is go put your money in a crypto currency fund, and if your audience is familiar with venture capital funds or hedge funds, it's the same 2 and 20 structure. There's like a lockup of a year to 2 years before you can withdraw it, but you don't want to withdraw it before that anyway. I just think that's a better way to go.
Sure. Well, listen, I think you'll find a lot of the listeners, they're looking for wisdom and guidance and advice and hiring accountants and advisors. So I think that you hit it spot on with what is the most viable solution for these kinds of these folks. So lots of people think that Bitcoin transactions are totally anonymous. Not so, right? It's that pseudo anonymity. It's that pseudonymity. Right?
Yeah. It's like a lot of things. The answer is it depends.
It depends. So it seemed to me that recently there have been demands for releasing who owns certain kind of cryptocurrencies and transactions that have occurred. So if you're a user or a buyer or acquirer of Bitcoin and you're hoping that you can just keep this anonymous, that's probably not the best course of action. This is not going to be something that's going to be completely anonymous, but you'll have some level.
I guess what I would say is, if you want to acquire cryptocurrency and you don't want others, for whatever reason, to know about it, one good reason would be you often travel to countries where law enforcement isn't very good. Owning cryptocurrency or being well known as someone who owns cryptocurrency is dangerous because unlike, let's say, you get kidnapped and somebody says, wire me all your money, the bank probably just isn't going to do it, even if you wanted them to, right?
Right.
With cryptocurrency, you just put in your password, and all of it can be taken out of your Bitcoin account, put into another account. So there are very good reasons that anybody who's listening to your show probably knows. You don't brag about your wealth. You don't brag about things because it's you should select who you tell certain information to.
Right.
So I think the anonymous nature of it is very helpful. You can't, for instance, you can, if you want, not put your name and any other identifying details on your Bitcoin account. So, it would be anonymous. Now, if I wind up sending you Bitcoin from that account, you can now say, well, his name's not on that account, but that account I know is Williams, right?
Right.
So that's where it's sort of not totally anonymous.
Got it. And if as soon as the transaction is done, it's immutable, it can't be changed or reversed. It's not. This is not like the safety and warmth of my credit card company coming to my rescue.
Yes. And you're absolutely right. That's exactly right. It is actually, we always have this view, especially in America, that you want to eliminate the middleman. The middleman is he's kind of putting a tax on your transaction, but he doesn't add value. Mm-hmm. One thing the middleman does, and a lot of what we do here in life, is they indemnify us if we have a loss. They will help us solve the problem if we have a problem. Well, there's no middleman in cryptocurrency. Mm-hmm. So, you have a problem and it's up to you.
Yeah, but let the buyer beware. So some people know, I want to spend just a second because I've got a few questions about Bitcoin in the future. Some people know that, Overstock was one of the first big online retailers to do and to accept cryptocurrency.
Yes.
There's places where you can buy gold and pizza. What is that? Expedia takes Bitcoin. So what do you, when you look at the landscape of current providers, do you think people are going to, they have it? It's not the kind of thing you can really consume in large part today.
No,
right? It's going to be a while.
Yeah. The way I would say it is this, it's, again, this is actually could be quite a complex area to discuss. So I'll try to just hit the highlights.
Thank you.
It would be a mistake for someone who is looking at Bitcoin, let's say, as an investment, like they would as a company, and say, oh, I bet a lot of people are going to be using Bitcoin in the future. I should own it. Mm-hmm. That might happen, but what most people do is they think of themselves first, and then they say, would I use it? And then they usually convince themselves correctly they would not use it. Mm-hmm. And then they say, well, if I wouldn't use it, no one would use it.
Right.
And that's the mistake. Bitcoin and cryptocurrencies are the worst possible way to pay for virtually everything except. And it is that except area that makes it very exciting, right? And again, we can go into all the sorts of things where using cryptocurrencies in a transaction is a terrific way to do it. I'll give you a way that it is not terrific. Mm-hmm. You go to Subway and you want to buy a $5 sandwich. Sure. That's kind of silly. Mm-hmm. You don't need cryptocurrency. I'll take a step further and say, if you are in the United States, you probably don't need cryptocurrency. Mm-hmm. If you are in the Western parts of the world, you may not need cryptocurrency. Cryptocurrencies have very specific properties, which are truly really beneficial in certain types of transactions. Most transactions which the average consumer will never conduct. Mm-hmm. So you just, a lot of people say, I know a lot of people who are very sad because when I was talking to them in 2012 and 13 and 14 and 15 and 16, and I was like, you ought to get in this crypto thing. And they were like, no, it's bad. Who would ever use that? And I was like, when you invested in Cisco in 1999, mm-hmm. did you have any great friends who really loved the Cisco switch and router combo?
Right.
And is that the reason you invested? No, mm-hmm. you probably didn't know what a router was, right? Mm-hmm. But you did some work to figure out somebody values this thing, and that's what makes the Cisco router valuable. Well, that's when I talk about spending 24 hours or some amount of time learning about crypto, one of the things you'd learn about is what are the sorts of transactions where it is really a useful tool. And then if you're a good investor, what you really care about is what's the future growth prospects of those types of transactions.
Right.
And if they're high, then maybe it's a good time to get in. And I would argue that if people go and take a look, they'll see that cryptocurrencies have a very bright future in a lot of areas of commerce. And you just have to investigate it to see which ones.
So, I mean, I've seen real estate transactions happening more and more with Bitcoin. Of course, they make news when they do. Is that it's not like a pizza or a Subway, but
Yeah, I don't quite understand why people would buy real estate with cryptocurrency. I think it's more just like it's a gimmick. Like, oh, look at I'm using cryptocurrency to buy real estate. So no, I mean, there's again there's properties of cryptos that make it really useful for certain transactions. They not Bitcoin, but other cryptocurrencies have very low fees. One of the things that cryptocurrencies magically do, and this to me is still magical, is there is no possible way in the world to pay somebody cross-border in another country, meaning same day.
Sure.
There is no possible.
No wire.
The way you can do it, but I don't think it's practical, is you can fill up a suitcase worth of cash, right? So you can do that, but there is no way to pay someone same day. Now, some people will say, no, that's not true. Right. I, use my credit card and I know it looks like you paid the same day.
Right.
The merchant who you bought that from probably is exposed for like 7 days.
Right.
So to chargebacks and to, fraud and all that. So there's no other way to know you were paid with certainty and that it'll never be reversed other than crypto. That's pretty cool because you know what's happening a lot? Cross-border transactions.
And therein lies a big part of the answer, right?
Yeah,
for what you're using it.
Globalization. Yeah. There's another side benefit of this, and I've been in the finance world for 30 plus years. I did not know what I'm about to tell you until a year ago. How much money do consumers around the world pay to convert one currency to another every year?
It has to be astronomical. What's the figure? What could it be?
Well, I will tell you, I did a back of the envelope.
Sure.
I needed to know the number for a business I was starting, and I came up with $750 billion per year that consumers pay. I was only off by 100%. It's $1.5 trillion a year that people pay others to convert their currency from US dollars to euros or from euros to yen, right? It is a gargantuan part of the global economy. How many people make money doing the conversion? Now imagine you have a currency that is the same whether you're in Bucharest or Bulgaria or Baltimore. It's the same currency. You never convert it. That is a huge savings for businesses. And I see a lot with my crypto payment processing company. That's a lot of the types of transactions we see is businesses that are paying vendors who are in another country and just doing it through cryptos and not having to go through the world. What do you want? Oh, you want Polish zlotys. Let me buy some Polish zlotys and pay a lot for them and so forth. Another huge area for crypto. Yeah, and I'll give you some numbers. The global GDP, most recent GDP is probably 2016 numbers. It's about call it $80 trillion, right? Global GDP. Of that, maybe 25 trillion is cross-border. People buying stuff cross-border. That is the faster growing part of global GDP. But if you go to one level deeper, which is this cross-border GDP, about 25 trillion a year, and digital commerce within that, it's maybe 500 billion a year. And this is selling software, selling music, selling video games, anything digital, cross-border. That's maybe 500 billion a year, but that is growing the fastest. And do you know what is really convenient to buy with a digital product? It using cryptocurrencies, because somebody can instantly send you a video game to download, but they couldn't because they first had to get your credit card or your check and cash it and make sure that you had it. Now with cryptos, you can pay people instantly. Maybe you're in the US and you buy something from a company in France. That French music company, a video game company, instantly allow you to download the product because they got their cryptocurrency instantly, and there's no way for you to reverse the charge. So they're comfortable giving you that digital product immediately. So cryptocurrencies are the fuel for the fastest growing part of global GDP. And it's not just one government, right? It's all governments of the world have an interest in understanding how cryptocurrencies are going to affect them. Remember, one thing that all governments really, really like doing is making up their own currency and forcing their citizens to use it. It's a really sweet deal. You just invent this currency, you print paper, and then you charge people real money for it, right?
Right.
Governments are not going to just walk away from that. Having said that, most governments in the world, in fact, there's maybe 2 or 3 out of all the countries in the world, say, we understand this blockchain and cryptocurrency stuff seems like there's some benefit to society. So we accept that. But as you said, yeah, there's some downsides. How do you collect taxes? If somebody does get ripped off, is there any way we can help our people and our citizens and so forth? Those are all reasonable responses in my mind. And this stuff takes a long time because policies and regulations that were built for a different era have to be modified to incorporate this new technology. And, we're old enough on this program to know we've seen several tech waves, the PC revolution and then the internet and then mobile and now crypto. All of these things require existing laws to be modified and whatnot. I will tell you, since I got involved with this stuff in 2012, there were times when I felt like governments just wanted to wipe their hands of it and not wanting anything to do with it. I would say in the last 12 months, the outlook has gone positive. Now it's still not great, but the sentiment among most governments is much more positive than it was 12 months ago. And many countries are simply saying, hey, let's put in some simple regulations. We'd like all the standard reporting that maybe bank accounts have. If you're going to use a cryptocurrency, a wallet, for instance, to store your stuff, they want the wallet company to, report suspicious activities and that kind of thing. I think most of the rules that governments think they'd like to have can be incorporated into cryptocurrency. And I think the benefits are so overwhelmingly positive for cryptocurrency that even the governments like India at one point that was incredibly negative, said, we don't want anybody using it. Now they see this stuff is going to make companies more efficient. It's going to allow people to buy things and not have to spend 1.5 trillion a year on currency conversion. The benefits outweigh the positives. But it's going to take several years. It could be 5 years plus before you see things clarified easily. The IRS, by the way, has done a lot now to clarify how you account for your gains and losses with crypto. It's not confusing. Well, it may be confusing, but it's not unclear anymore. So, I think we're getting where we need to be.
I guess I have to ask. I got you on the call. I got to ask one more question. So, is there anything magical about Bitcoin itself, or is it just the first to market? I need to hear your opinion on that because I've always wondered. If it was like, wow, no, there's something really unique about Bitcoin. But you said there's 6,000 others. Well,
I'm sorry. There's 6,000 other cryptocurrency exchanges.
Oh, got it.
There's only 3,000 cryptocurrencies.
Oh, okay, got it. But so, is there anything magic about the Bitcoin itself, or is it just first to market, or early to market, or most well known?
Yeah, it is. It is that. If I was talking to a bunch of venture capitalists, I would use an analogy of Ethernet versus token ring, but it probably wouldn't mean much to this audience.
No.
But Ethernet was a was it was not a sexy way for computers to talk to each other. Mm-hmm. IBM had Token Ring and had a lot more benefits initially. But you know what? It became this de facto standard, and that's just how it works. Everybody adopted it.
How about VHS and Beta?
Yeah, it's very similar, right? Okay. Whereas here, I would say Bitcoin, it has the brand name. It's actually kind of the term Bitcoin is sort of used interchangeably to mean cryptocurrency in general. And it is a, quote, dumb coin, meaning it doesn't have any intelligence in it, unlike, let's say, Ethereum, which imagine if you had a US dollar or $10 or $100 and you could write an instruction on the dollar bill and say, hey, give this to Mike, but only give it to him if he shows up on time tomorrow for dinner. Right? And then the crypto would do it. So we call those smart contracts. And there's a lot of cryptocurrencies that now use smart contracts. It's like being able to program into your money a set of instructions.
Oh, man, that doesn't exist in the real world. Holy cow.
Yeah. And so Bitcoin is the first, but the reality is it has a lot of flaws. We have to tip our hat to it because it was the first and it brought in this new wave of all these great things. But it's, maybe it's Yahoo, and now we're looking at, Google. Mm-hmm. And so Yahoo is great. We have to give it its due for what it did in its era. But new coins are coming along that are better.
Oh, okay. Well, so in conclusion, you talked about why cryptocurrencies. I think we understand better why we understand the future better. We understand the government's role better. We understand how to acquire it, how to hold it, using a professional. Of course, none of this stuff is blanket investment advice. You got to, look at your own personal situation first before you do it. Will, you're amazing. You're amazing. I can't thank you enough. I really appreciate your time. We went way over, but I'm sure this will be our most downloaded podcast for sure. And thanks again to you and your great advice and wisdom.
Thank you. And I hope your audience takes a look. I think it is worth having some exposure to this asset class.
They will. Thanks again, and have a great day. And again, those for listening to the podcast, we appreciate your time. And look for us on the next installment. I think we're going to be doing the quarterly market outlook next. Thanks again, Will. Take care. Have a great day. All opinions expressed by the guests of the Manage the Fund podcast are solely their opinions and do not reflect the opinions of Henry & Horth Wealth Management or Independent Financial Group and may have previously been disseminated by the host or guest on another media source. Independent Financial Group does not allow the purchase of any cryptocurrency-based securities. Do not treat any opinion expressed on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of an opinion. Such opinions are based upon information of the guest on the Manage the Fund podcast that we consider reliable. Neither Henry & Horn Wealth Management nor IFG warrant its completeness or accuracy, and it should not be relied upon as such. Henry & Horn Wealth Management and IFG are not under any obligation to update or correct any of the information available on the podcast. The guests of the Manage the Fund podcast are professional traders who may actively be involved in securities discussed herein or on behalf of themselves, their companies, or their clients. The host and guest of the Manage the Fund podcast do not guarantee any specific outcome or profit. You should be aware of the real risk of loss in following any strategy or investment discussed in this podcast. Investors may lose money following advice provided by this podcast. Investment strategies mentioned on this podcast may not be suitable for you. You must make an independent decision regarding investments or strategies mentioned on this podcast. And before acting on information on this podcast, you should consider whether it's suitable for your particular circumstances and strongly consider seeking advice from your own financial or investment advisor.